also have major banks this week that are set to kick off their third quarter earnings. We've been talking about this even though bond markets are closed today. So we have Nichols Wealth Management President David Nichols, who's joining us right now. Let's talk about those banks. You've got JP Morgan, Citi, Wells Fargo. What are you expecting from the earnings?
Yeah, absolutely. It should be a good week for financials this week. JP Morgan had stocks up over 7% year to date. They should have a great earnings report. And so as the interest rates are rising, that does affect what we as consumers pay for loans and mortgages, but it's going to be great for financials, specifically insurance companies, banks. Citigroup has beat earnings consensus 4 times over the last years, so you should see them perform well. Wells Fargo, there's a lot to love with their rebranding effort. The dividend looks great, so there's a lot of upside fundamentally for Wells Fargo. So should be a positive week for financials.
What about if I'm talking maybe short-term, next few months or within the next year or so, given the amount of corporate debt, even for these banks, will interest rates hurt them as much as other companies?
I think you will see some effect there as far as corporate debt goes, but earnings will be offset just with net interest margin. So as these rates rise, especially with insurers, the yields on their bond portfolios should be more than enough to help cover any interest debt that we will see in the short term.
Do you think it's smart to go heavy financials right now, given the possible volatility over the next 11 weeks for the end of the quarter?
If you're looking short-term over the next 11 weeks, I still think financials are a good play. We are overweighting to financials. So short-term, yes. Long-term, I don't think the upside is as high for financials, but I think it would be it'll pay off in the short term, no question.
And what about tax cuts? Do you think that these corporations are still going to continue to reap the benefits just within the next little while?
Yeah, I think that what we're seeing this year, at least 30% of revenues this year are directly attributed to tax cuts. Now, as we get into 2019, I actually think we'll see the earnings cut in half in 2019 just because you don't have that boost from tax cuts. So, yeah, I think it's been one of the biggest drivers to earnings this year. It's a testament to Trump policy, but you will see that starting to decline going into 2019.
Great insight. I really appreciate it. Thank you, David.